Hello everyone, welcome back. This is module 2 of Principles of Insurance and Risk Management. This is the second lecture of this module. In our previous lecture, we covered definition and basic characteristics of insurance. In this lecture, we are covering characteristics of an ideally insurable risk. There are 6 characteristics of an ideally insurable risk. Let's move to the first one. The first characteristics of an ideally insurable risk is large number of exposure units. It means the insurance company will deal with a large number of insurance policyholders. It will help them to predict average loss based on the law of large numbers. The second characteristics is accidental and unintentional loss. The insurance policy will cover only accidental and unintentional losses. For instance, you have got a house insurance policy, but it does not mean that as you have got a insurance policy you will receive financial benefit if you burn your house intentionally. So if there is any sort of accident, definitely you will receive financial benefit from the, or you will receive compensation from the insurance company, but your the situation, that means the accident, the situation should be accidental and unintentional. The third characteristics of an ideally insurable risk is the loss should be determinable and measurable. In case of life insurance, the insurance company can easily determine and measure the losses because they know the average life expectancy of a population. In the meantime, the losses are also covered by the losses are also determined by the premiums paid by the insurance policyholders. So, however, in other insurance policies like marine insurance or other sort of insurance, it is not always not really easy to determine and measure losses accurately. However, they can predict their losses. The third characteristics is there should not be any catastrophic loss. Say for example, insurance policy will not cover losses like financial disaster or losses due to earthquake, because these are catastrophic losses. These will not be covered by an insurance policy. However, the exposures to catastrophic losses can be managed by using reinsurance or using financial instruments like catastrophic bonds. The fifth characteristics is the loss. There should be a calculable chance of loss. That means the insurance company should set their premium in a way so that the premium is sufficient enough to pay all claims and expenses and their expenses. In the meantime, the premium should also brings profit during the policy period. The final characteristics of an ideally insurable risk is the premium should be economically feasible so that people can afford to purchase insurance policy. For example, a premium for insurance to be an attractive purchase, the premium must be substantially less than the face value of the insurance or the total amount of the insurance policy. So, based on these 6 requirements, most personal, property, and liability risks can be covered by an insurance policy. But market risks, financial risks, political risks, then natural disasters are not normally covered by an insurance policy, or these sort of risks are difficult to insure. So based on their 6 characteristics of an insurable risk, fire insurance, risks of fire insurance can be covered. So risks of fire is an insurable risk because it covers the first characteristic, that means the large number of exposure units. So definitely fire should be accidental and unintentional. Fire insurance on a property can be determinable and measurable loss because the insurance company can determine the value of a property. Fire is not normally catastrophic. There are occasional catastrophic fire like bushfire or other sort of fire that occurs in many places of the world, but the catastrophic fire does not affect a large number of communities. So fire is not normally treated as catastrophic loss. The insurance company can also calculate the chances of loss. So normally we know that during summer there is a more incidence of fire, or but during rainy season there are less incidence of fire. So based on the previous statistics, the insurance company can calculate chance of loss. And finally, premium of fire is economically feasible. Say for example over here in the US context, premium rate per 1000 of fire insurance is relatively low. So the premium of a fire insurance is economically feasible premium for the insurance companies, and these premiums are also this is why, as these are economically feasible, these premiums are also attractive to the insurance policyholder. Now if you look at the second example, risks of unemployment is not an insurable risk, though there are large number of employees. It is not possible to predict unemployment because there are different types of unemployment, there are different types of labor, and unemployment is not always accidental or unintentional. On many occasions employees give up their jobs, so it is not always unemployment is not always due to unintentional or accidental. Then unemployment losses are not determinable and measurable because no one knows when the unemployment will increase or when the unemployment will decrease. So unemployment is not easy to predict, and it is it is not like there is no catastrophic loss in case of unemployment, because during financial turmoil or during financial difficulties, unemployment increases, so there might be some sort of catastrophic loss. It is not also possible to calculate chances of loss, as it is not really possible to predict unemployment. And finally, there is no feasible premium for unemployment. So unemployment is not an insurable risk, but risk of fire is an insurable risk. So to be insurable risk, to be eligible for an risk to be eligible for an insurance policy, these 6 characteristics must be met. That's all about this lecture. In our next lecture, we'll cover adverse selection and insurance.